Did you know that Paytm's 18,300 crore IPO is the largest public issue in the history of India's capital market? Namaste everyone, welcome to our YouTube channel. I am Pooja Sharma and in today's video we are going to talk about Paytm and its IPO. Let's get started. Let us first see where it all began. In 1997, while still in college, Vijay Shekhar Sharma started the website indiasite.net, which he sold 2 years later in 1999 for $1 million. Yes, $1 million. जो कि आज भी कोई छोटी वैल्यू नहीं है, तो सोचो 24 साल पहले उसकी क्या वैल्यू रही होगी. So after raising this amount, Vijay Shekhar Sharma used it as capital to launch the parent company of Paytm in 2000, that is 197 Communications. So in 2000, 197 Communication used to send mobile content including news, cricket scores, jokes, ringtones, exam scores like we used to get back in the day in the form of normal text messages. This was their main business until Paytm happened in 2010. In 2010, Paytm, which was actually an acronym for Pay Through Mobile, started out as a platform to help people recharge their mobile phones. By 2014, it became a digital wallet platform where you could load money into the wallet and make payments to utility companies. For example, you could pay your electricity bills or gas bills. But it wasn't until the now highly criticized demonetization move by Narendra Modi in 2016 that brought the winds in Paytm's favor. As you can see from this timeline of Paytm, from 2016 onwards, Paytm has gone into different verticals at a very rapid pace. From directly competing with Amazon to Google to Zerodha to Policybazaar to Khatabook, Paytm now cannot just be called a payment app. In this segment, we are going to quickly analyze Paytm's business and see how it makes money, or rather tries to make money, because it has been a loss-making company for several years now. YouTube में एक टॉपिक काफी टाइम से ट्रेंड कर रहा है and that is multiple sources of income. And I believe Paytm ने इस multiple sources of income के ट्रेंड को कुछ ज़्यादा ही seriously ले लिया है. Let's see how. So Paytm's sources of revenue can be broadly divided into 3 parts. Number 1, commission. Number 2, earnings from escrow accounts. And number 3, cloud services. Let's take a look at the number 1, commission. This includes not only the commission Paytm earns for every successful hotel or flight booking or a simple phone top-up recharge, but also the commission that it earns by selling mutual funds and different insurance schemes listed on their platform. So this earning is quite simple to understand, basically earning commission from every industry whose products or services they sell on their platform. But the second source of revenue for Paytm is something that many of you might not be aware of, and that is earning from escrow account. Simple bhasha mein, this is the interest Paytm earns from the money we keep in Paytm digital wallets. Aise kaise? Let's see how. So the money we keep in our Paytm digital wallets is essentially an interest-free capital for Paytm, which it uses to invest in overnight government bonds or short-term liquid funds to earn a decent interest. As of 2019, Paytm had accumulated 3,629 crore of rupees of revenue from just escrow accounts. So you know how big a source of revenue this is for Paytm. The third and the more recent sources of revenue for Paytm is cloud services, basically the kind of services a Khatabook provides, partnering with merchants and providing them with software and cloud services for various aspects of their business like ledger, billing, vendor management, customer promotion, inventory and catalog management. Other than these, they also have an e-commerce wing in the form of Paytm Mall, but these are the major sources of revenue for Paytm. Now, before we move on to the last segment of this video, let us quickly check out the IPO details. So out of 18,300 crores Paytm is likely to raise, 10,000 is for OFS, that is offer for sale, and 8,300 crores is a fresh issue, which basically means Paytm will be paying 10,000 crores to the existing investors who will be cashing out their stake in the company, while the balance 8,300 crores goes into Paytm's account, which they will be using to further expand and grow the company. So the IPO opened on 8th November 2021 and it closes on 10th November 2021. The price band is between 2080 to 2150 and the minimum order quantity that you can apply for is 6 shares. While as a retail individual investor, you can apply for maximum 15 lots, that is 6 shares into 15 lots is equals to 90 shares. Now, in the last segment of this video, let us check out the 4 major risks involved with Paytm. The number one is profitability. In their red herring prospectus, they have mentioned on page 40, we have incurred net losses for the last 3 years. They've also written, we expect to continue to incur net losses for the foreseeable future and we may not achieve or maintain profitability in the future. They continue to write that if we fail to achieve or maintain profitability, our business, results of operations, cash flows, and financial condition could be adversely affected. We cannot assure you that we will ever achieve or sustain profitability and may continue to incur significant losses going forward. Any failure by us to achieve or sustain profitability on a consistent basis could cause the value of our equity shares to decline. Further, some of our subsidiaries and associates have incurred losses in the past few fiscal years. To continue their operations, they may need financial support in the form of debt or equity from their shareholders, including our company. There is no certainty that they will become profitable or be able to raise adequate capital to continue their operations or meet their obligations. If these subsidiaries or associates do not become profitable and are not able to raise capital either through debt or equity, their operations may be affected. This, my friends, is one of the 2 major reasons I'm not investing in Paytm. The second reason, and also you can say the second risk involved with investing in Paytm's IPO, is its abnormally high valuations. Having priced its IPO between 2080 to 2150 per share, Paytm has put up its valuation at 1.5 lakh crores, which is 70 times of its operating revenue of 2,109 crores as of March 2021. To give you some more context of these numbers, Nestle, a company that has a great track record and that too for several decades now, demands a valuation of 1.82 lakh crores. And Paytm, 70 times of the operating revenue. Unimaginable. These high valuations for a loss-making company, that too with no profitable subsidiary, are expensive. Make no mistake about that. Now you all must be saying, so what? So kya ho gaya? Amazon was also a loss-making company, right? You are right, but you must always remember that Amazon had a profitable cash cow in the form of AWS, that is Amazon Web Services, whose profits funded for other Amazon's loss-making subsidiaries. But Paytm doesn't have one such profitable industry subsidiary. Moving on to the third risk, and that is high competition. The list of Paytm's competitors is a long one. Reasons? अगर आपने वीडियो अभी तक ध्यान से देखा है तो आपको पता चल ही गया होगा. If you just look at the merchant payment space, then you will find out that Paytm is not only competing with PhonePe and Google Pay, but also Amazon Pay. And as per the latest UPI payment share data, PhonePe and Google Pay are leading the race with 47% and 35% market share respectively, while Paytm's share has dipped to 9% from 14% earlier July 2021. In addition to this, Paytm has strong competition from fintech companies like Zerodha and Grow in the mutual fund space and Policybazaar in the insurance space. If that wasn't long enough, Paytm also has high competition from private sector banks like HDFC Bank, Kotak Mahindra Bank, ICICI Bank in the banking space. The fourth risk is that of high regulatory compliances. Paytm comes under the scrutiny of not just one financial regulator like Policybazaar or Zerodha, but it comes under 3 financial regulators. 1, RBI because of its Paytm Payment Bank. 2nd, SEBI because of its money division and mutual fund division. And 3rd, IRDA because of its insurance division. Thus, any unfavorable move by any of these regulators can impact the valuation of the company in a big way. In the end, I would like to conclude with what valuation guru Aswath Damodaran wrote about Paytm in his recent Bloomberg article. The picture that emerges of Paytm is that of a management that is too focused on racking up user numbers and too distracted to care about converting those into revenue and profits while making grandiose statements about its future. Using the corporate lifecycle framework to assess Paytm, it resembles an adolescent with attention deficit issues in its scattershot approach to growth and absence of attention to business details. And if you're an investor, you have to hope that going public will cause it to grow up quickly. So, there you have it. After Zomato IPO, the Paytm IPO will be another monumental event for our country's startup ecosystem. But whether investors buy into their stories or high valuations along with bad financial history goes against the company, we will know soon enough. Until next time, namaste, bye bye, and take care.